Okay, fam, welcome back. So today we're going to be going over the buy, sells, and dividends for the week of January 12th through the 19th, or through the 18th, I should say. So with that being said, let's get it. Okay, so I'm well aware that Bitcoin is going to the moon, or at least it appears to be so. Pretty much like I told you guys it was going to, most likely. We'll have to wait and see on that, but we'll cover that in a separate video when it makes sense to do so. So let's go ahead and get into the content. I want to cover this first before it kicks me out of here because of the security time measurement thing it has on here. So, dividends received this week from this account on M1, basically a penny from Philip Morris, 44 cents from HRZN, well, 45 cents in total. 63 cents from Leg & Platt, and APLY 61 cents. So not really a whole lot going on there. Okay, so in terms of crypto, we still have the exact same positions. Nothing's changed. We have not added anything yet and or sold anything yet. So we'll talk about all of that also in a later video. So it is all still the same. We are still expecting a very huge bull run this year. Not just for crypto, but for stocks as well. So I think it's going to be pretty green across the board in all sectors, in all markets this year. I think we're going to see something very, very similar to 2021. I'm just going to say it. Okay, so the other thing I wanted to go over here is that the call debit spreads that we had set for expiration for a couple of days ago did expire worthless, unfortunately, so we had to take the hit on that one. But that was already kind of calculated ahead of time. I mean, again, we've made, God, I don't know, well into the five figures in crypto. I mean, well into the five figures. I don't even know exactly how much it is. It's a lot, though. So, taking a couple $1,000 hits on some call debit spreads, not really a big deal. Okay, so I don't know what's going on here, but for whatever reason they're not showing up. But yeah, they did get closed automatically because, again, if at the time of expiration, if in this case a call debit spread is a long position, okay, it's a bullish trade. If the underlying share price closes below the strike price of both the long leg of the option and the short leg of the option, then it should expire worthless. There should be no assignment and expiration or anything like that. It's only when you get pinned in a trade, which in this case would be the strike price or the price of the underlying is somewhere in between the two strike prices at the time of expiration, which did not happen. It was well below them. It's only in a situation where you get pinned that you run the risk of assignment, as far as I know. So it's complicated stuff. You guys can research this in your own time, but I will tell you guys right now, if we had been massively in profit, like to the point where it was getting close to our top strike price, we very highly likely would have closed out long before expiration. We wouldn't have even waited. We would have just said, hey, we're up 10, 15, 20, 30, $40,000, whatever. Let's just take this crap off and be done with it, right? No need to complicate things. We could close that out a week or a month or 2 months early, depending on what it looks like. And then that'd be the end of that. So anyways, so next thing here, going over the Webull account. Again, on the Webull account, not much has changed. We still have the one position. We're waiting for it to go into profit. We're pretty confident it's going to happen this year. Again, I'm expecting this to be an extremely bullish year. I mean, extremely bullish. You guys don't see it yet, but I'm waiting to actually see how this is going to play out. I'm pretty confident that's what's going to happen. So dividends haven't rolled in yet. Probably not going to roll in until, I would say, sometime around the end of this month. So yeah, nothing on that front as of right now. In terms of Robinhood, so I'll tell you guys right now, we got dividends from YMAX, YMAG, and QDTE. The dividends for YMAX and YMAG were not that high this week. I think part of the reason why is because a lot of the volatility in the markets has kind of subsided going into the holidays and into the inauguration, which kind of makes sense. I mean, it's a little boring and obnoxious, but is what it is. We just got to deal with it. So YMAX $30.46, YMAG $12.09, and QDTE $37.82. Keep in mind, these are weekly paying ones. So even, we have 250 shares of each of YMAG and YMAX, and even on a weekly basis, you're still talking like over the course of a month, $120 a month and $50 a month. So it's not too bad. QDTE 3780, that would still come out to about $150 a month. So it's not too shabby, right? Okay, so in terms of the dividends that we got, so $80.37. The M1 Finance dividends here, $1.70. So we closed out a couple of positions at a loss. This is one of the rare weeks that we did actually take a loss. Are we concerned about it? No. I mean, we've made stupid amounts of money over the last 12 to 24 months. Not even remotely concerned about it. There's a couple of reasons why we did that. We want to free up cash because we intend to implement a new strategy this year, which is designed to outperform the market. Okay, that's the first thing. And number two, we want to have the liquidity on the side to be able to take advantage of those opportunities at a much larger scale. We don't want to be limited in the amount that we can buy as much as humanly possible, or what we can buy, depending on what the price is. So yeah, unfortunately there was some losses this week, but that's fine. I'm not too concerned about it because we're expecting huge profits this year. Okay, so in terms of the buys, so we bought some SPYT, CLSK, FEPI, and a new position, EVgo, which I'm actually going to go over right now. So EVgo is an electric, trying to remember exactly what this thing is. It does batteries for electric vehicles, if I'm not mistaken. So I'm pretty sure Trump is not going to want to put a ban on electric vehicles. What I think he's going to want to do is probably just allow the two markets to grow in tandem, the gas-powered vehicles and the electric vehicles to grow in tandem, but not force people to use electric vehicles, which is nice because I can tell you guys right now, personally, I prefer the ICE engines. I'm not a big fan of the electric cars. I'll just be honest with you. So that's just my 2 cents. You guys are free to leave a comment down below telling me what you prefer. So everybody's got their own flavor when it comes to cars, right? Okay, so going down over here to the 4-hourly time frame, like I told you guys in previous videos, what we're looking at is to get into these positions at a minimum. Any position, doesn't matter what it is. It could be a dividend-paying stock, cryptocurrency, growth stock, penny stock, something for an options-related play, whether it be a call debit spread, put debit spread. In this case, put debit spread would be bearish, meaning it needs to be overbought. Mainly bullish, so we'd go with the call debit spreads, looking for oversold and or maybe some options premiums through the wheel strategy. So in this case, you can see a couple of different times we had oversold signals. Well, we got lucky and we got another one here in January. These oversold signals don't usually happen this often in a calendar year, so really shouldn't be that common. You guys can see going back here in 2023, we had two, and essentially maybe 2 or 3 in the year of 2023. Then we had 1, 2, 3 in the year of 2024, and there was a big stretch here between April and October, so we consider ourselves pretty lucky on this. But yeah, we're just buying at the oversold. Okay, it's pretty much hitting these candle lows here. There's a big gap that needs to be filled here for the money that we took a loss on this week. I can tell you guys right now, if we just go back up to this gap, we are going to make a absolutely stupid return. As a matter of fact, I can tell you guys what that is right now. It's a relatively small position. It's only $1,500. So that would print $1,050 in profits, and that would more than make up for the loss that we took this week. And that money could roll in through anything. It doesn't necessarily have to be EVgo. It could be any position, crypto, anything. CLSK, I mean, it could be anything. And once again, on the higher time frame, we are oversold on the daily too, which is also extremely rare. We've only seen it 2 times prior, in November and April. And once again, the moves were absolutely stupid. So the first one was 450% gain. I mean, if we can pull that one off, I'm not going to be upset at all about that. Okay, so 52% on the last one. You guys can see how huge these moves are. All right, so let's go into the details of the different things that happened throughout. So I'm trying to remember exactly what this is. Okay, so we took the so I believe the $69 loss was on the spot shares of Soxhole. So we sold slightly below the average share cost. The $354 was for the options on Soxhole, so we had to pay some money to get out of the options. But again, technically, based on the money that we received, which was actually greater than the money we paid to get out of it, it technically is a gain. But because that gain was already calculated in a previous week, we're just accounting this for a loss this week. Okay. And then the $423 is for GUIs. So as of this week, that minus the dividends, so minus $713. But again, the amount of money that we made just in 2024 alone was probably pushing like 50 or 60 grand. So not really too concerned about a small loss. All right, so let's go over the different positions here. We'll start with the actual dividends themselves, and we'll get into the buys and the sells. Okay, so you can see the 1209 here on, I think this is YMAG. Yeah, YMAG. So you can see it was much greater in previous weeks, but again, the volatility kind of cooled off a little bit going into inauguration. That's pretty much to be expected. So next one here, YMAX. And like I told you guys before, I think the market is pretty much bottomed out at this point where you should see quite a bit of upside going forward. Again, usually when you start seeing like a bunch of different indicators in the markets that can, like many different indicators and many different stocks that indicate that we're probably oversold. That's usually when the contrarian move comes into play, and it may not be a bad idea to start getting bullish on the markets when everybody else is like, oh yeah, it's all going to zero, guys. Like these people on X, half of them probably don't even look at the charts. They probably just look at what other people tell them, right? They're not actually doing the work themselves, so they wouldn't know. But, and of course, people are very biased. They're very, I hate to use the word tribalistic, but a lot of these people think very one-sided. It's very difficult to be in the markets and to view both the bull and the bear perspective. A lot of people are either bearish, period, or they're bullish, period. We're pretty much bullish, period. But again, we do acknowledge when there is a potential for bearishness. Okay, we're not going to sit here and be like, oh yeah, it's at all-time highs, guys, but it's just going to keep going up. We're not going to tell you that. All right. So anyways, YMAX here. So $30.46. You can see it was less than the last two, but I'm expecting a pretty green Q1, so I think we'll be just fine. I think we'll be okay. Okay, so next one here, QDTE. $37.82. So this one was actually greater than the previous 2 weeks. Again, the volatility to the down and the upside has been pretty insane on the NASDAQ. NASDAQ is still not back at all-time highs, so there's quite a bit of upside here for QDTE. Okay, so now we're going to go over the buys. We'll go over CLSK first. So we did actually get more shares of CLSK going into basically before it started popping to the upside. So $11.23, average cost here, 50 shares. That was recently. So as of right now, the total position, 1,950 shares at an average of 1383. We are down slightly. That's fine. We're expecting the miners to have a big move up at some point, and our personal target is probably going to be somewhere between, I would say, 20 to 25. I think is realistic. I don't see any reason why that can't happen. Okay, so next one here, SPYT. And we could have done cover calls on CLSK too to collect some more premiums, but we don't think it's the right time quite yet. So we're gonna wait. Okay, so let's see here. SPYT, so you can see 101.06 shares on the 13th, 1.05 on the 14th, 9.46 on the 14th, 1 share on the 15th, and 5.19 shares on the 16th. But what I want you guys to notice about these buys is we have been buying these shares while they have been under $20. I told you guys if at any point this thing gets under $20, in my opinion, it's a buy because that means the markets are selling off. And usually when the markets are going to the upside, this thing will only go slightly over $20, whereas if it goes down, it will go under $20. So if you're looking for more upside on SPYT, the only way you're going to get it, besides the 20% dividend, which is pretty much set in stone, that's why the share price usually kind of bobs around $20, is just to buy it on the dip when the market drops, which in this case has been recently. Okay, so we bought a couple more shares of FEPI. Again, we don't have AIPI again yet, but at some point we will re-add it because we're pretty bullish on AI. So 108.79 shares here. Average cost just under $56. 2.01 shares here. at an average cost of $49.61 on the 16th. And again, FEPI is still pretty cheap right now, and the ex-dividend date is right around the corner. I don't know exactly when it is. I think it's like a week from now, but just something to keep in mind. Oh, and the other thing is, even though we took a small hit on the call debit spreads expiring worthless, we still have the ones for March 21st for the Riot call debit spreads with a strike price of 19 to 20. So basically, if this thing gets over $20, we're going to make about $6,000. That will essentially make all the money that we have lost on those call debit spreads back and then some. All right, so let's go over the next position here, which is EVgo. So we showed you guys the position on the charts. Now we'll show you guys the position on the platform. So again, buying into the fear is generally always, I can't say this is financial advice, but it's better to buy into fear than it is to buy into greed. Of course, Wall Street always loves to go with the winners, right? That's how they operate. They want to make money on things that make money. It just makes sense. But I've looked at many different charts, hundreds of different setups, where the oversold signal on the 4-hourly time frame, probably about 95% of the time, it usually is at a bottom when that happens, and the upside is absolutely stupid. Okay, in rare cases, 5% of the time, you might have some kind of bullish divergence where the price goes lower and the RSI is going higher, but then that second bottom is ultimately the bottom, and it's usually only slightly smaller than the first bottom, and then it takes off like a rocket to the upside. Okay, so average cost here, $3.58. Slight drawdown here, not too worried about it. 419 shares, or roughly about 420. Like I said, if it fills the gap, we make 70%. That's about $1,000 gain. We're not going to be upset about that. Okay, so next two here, we'll go over Soxhole real quick. We probably will get back into Soxhole at some point. We're just not going to do it yet. Because, I mean, part of the reason why we sold out of this position, even though we had to take a loss on it, was the opportunity cost. We've been sitting on the position forever waiting for it to go up, and it just has not gone up, and we don't want to tie up our money with something that's not actually moving. So, but you can see we got out here for, it looks like about 23 cents a share less than what we paid. So slight loss on that. That was the cost to get out of the covered calls that we had on this. And yeah, that's it. So last one here, GUI. And we may buy back into this one at some point. This may be one of those ones that we won't buy back into it unless we see Google oversold on the charts. And we'll be looking at that. We look at the Mag 7 pretty often. So 100.15 shares here at an average cost of $14.80. So we got like 75% of our money back. All right. Anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.